Hey traders, a very warm welcome to you. So, third video in this multi-part series where we're talking about 10 steps of becoming a profitable trader. Go and check out video 2 and video 1 if you haven't already. This will make a lot more sense. Okay, so now we're in a process. We're going to do a personality analysis. Again, we're looking at it from an objective, honest perspective. The analogy is we're looking in as a trading firm owner onto our trader and analyzing ourselves in that way because we're far more objective, far more honest, far more fair. So personality. Oh, I've just thrown away the nicest pen. Let's use the red pen. Personality analysis. Now, what do I mean by that? So I need, you know, guys, most of our problems come down to one thing in trading. It's trading discipline. The strategies itself, it's relatively easy to get a profitable strategy. Okay, it might sound like if you're listening to it now, you're saying, well, what do you mean? It's a crazy thing to say. There are many profitable strategies out there. I've shared some, we have some online. There's multiple profitable strategies. The difficulty comes in executing that strategy. And not only that, because you could say, well, I can program it and do it automatically, fine. But knowing when the strategy is going to work and when it's not. Now, okay, let me just put a caveat on that. Market conditions change, okay? And if we talk about, we're digressing slightly, but let's just look at these conditions here, okay? We've got a bull market running up, a moving average crossover trend strategy, buying low at lower Bollinger Band, buying oversold, anything very simple like that is gonna make you money. Obvious, it's a bull market. You're buying a trending bull market. Now we switch into just chopping around for 2 years. You start buying moving average crossovers, you're going to get killed. It's not going to make any money. It's not going to work for you. Similarly, all of a sudden now you start selling kind of Bollinger Band spikes on your daily. That's going to make you money. But if you did that in this period, you're going to lose your house. You know, then let's say we go into a huge bear market. Again, it's a different conditions, very, very volatile swings. You know, adding to your positions on dips is going to get you slaughtered. So, you know, part of the trading skill is to decide exactly what strategy and when. Anyway, I digress. We're going to look into that in a little more detail in a second. Let me get a better pen if I can. I think this one's a bit better. That's better. Okay, so personality analysis. We need to look at ourselves objectively. So we've got our journals, we've got our statements, and we've got our kind of thoughts on the best and worst trades. Get rid of the statements for now. Let's just have a look at what we are, how we are as a person. So again, the objective perspective, we're looking in and saying, hey, you know, do you like day trading? Do you prefer to be swing trading? You know, what do you feel? What's your you know, your immediate thought about your weakness in trading when I say to you, okay, what's your biggest problem in trading? You know, where do you think the problem is? And you'll know straight away. You'll go, you know what? It's you know, it's not honoring stops. It's taking profit too early. You know, it's getting frustrated after a series of losers. But now we're starting to dig down onto it and we say, okay, if you're the type of guy who gets angry or frustrated after a series of losing trades, that's an easy fix for us. We can say, listen, we can implement something straight away. We can say, listen, you know, if you have 3 losing trades, then you take a timeout. Okay, whatever it is, with your swing trading and day trading, you get out of there because you don't want to trigger that demon of you, which puts you into that tilt mode, that angry trading mode that you don't want to get into. Another thing is, hey, listen, you know, I get frustrated or angry and I start to trade poorly when I miss something. Okay, so if I miss a trade, again, we can start to put in things which are going to help us not get angry. We're not going to, the point of this is, guys, is listen, we're not going to try to iron out every single flaw, if you like, because they're not flaws, they're human nature, it's part of the deal. But what we're trying to do with this is we're trying to say, listen, what triggers the weaker aspect of our trading personality, i.e. chasing stuff, too much size, not honoring stops, trading too much, all those kind of things that we know are making us bad traders. The point is not to say, stop doing that. Say, hey, stop trading too much. Just what are you doing? Stop trading too much. It's obvious, just stop trading too much. You know, that's the worst thing you can do. You need to have a strategy and say, listen, why are you trading too much? I'm trading too much because I feel that there's more opportunity than there really is. Okay, well, let's examine it and say, listen, is there really opportunity? let me show you the evidence. Statements come out, where statements come in, and we say, listen, look, you traded 10 times that day and 8 of those were losers. So, and you've done that for kind of 20 days in that period, in that month, whatever it may be. So you can see that it's not that case. However, look, if I was to chop that into a third and have 30% of your trades, look at your P&L now, and showing yourself that raw, obvious data in black and white that says, hey, there's no point in trading actively, because if you trade actively, you're losing money. Your logical brain is going to say, it's right, you know, I don't need to trade so actively, and the proof is that it's doing me damage. So then, once you've done that, you then put in aspects that say, okay, well now I want you to take 2 trades per day. Okay, this is now part of the solution that you have. 2 trades per day for a month. If you're day trading, for swing trading, okay, let's look at something else quickly. Let's look at something that says, okay, I'm always kind of frustrated that I miss a move and then I dive in after it. Quite a common one for some people. Wasn't something for me that affected me too much, but it might be for you. And again, it's all about grabbing what is right and what's wrong for you. So the move would go, you'd be frustrated that you missed the move, you thought it was a long, you missed it, and then maybe you chased it a bit too much, comes down, stops you out. This is the kind of thing, again, we can see this in our statements, we can see this and say, hey, listen, you're getting triggered, whatever going on in your brain that's saying, I'm annoyed and frustrated and something is making me take this from a completely irrational perspective of, I've missed it, I must still get in on it. Proving it again with your statement, so your logical brain says, hey, you know what, look how many times you've done this, how many times it worked for you, 2 out of 50. There you go, there it is in black and white. Now, let's start to now put a process in place to try and stop doing that. So we've seen the evidence that doesn't work with the statements. Now we're going to look and we're going to say, hey, what do we do to stop that? If we feel like we've missed out, or let's quantify it and say if it goes more than X% or X ticks, whatever time frame we're trading above, then we don't even trade it at all. Or we can say to ourselves, you know, if it's part of our strategy, of course, this comes in down to an operations level, then we can put a limit in here. But more than likely, let's just leave the thing. You know, if it goes past by a certain amount of our level that we thought we were going to get into, or in any way we feel like we're chasing it, leave it, get rid of it, and do not trade that for the next however many, you know, it could be a couple of days if you're day trading, it could be a couple of weeks if you're swing trading. But in other words, get rid of that, because that market is holding negative emotions for you. It's saying, listen, these things have changed. Now, if you're day trading, let's say you're day trading the DAX, for example, and it's gone down to lows and you've missed a long, then fine to forget about it for the rest of the day and then come in for the next day, because it's going to be a fresh day, it's going to be different. And also, if you're just focused specifically on one market, then by all means, you can't, no point putting it on the bench for weeks. But the point is, you want to flush that out of your head of I've missed a trade. So whatever, how long that takes you, again, comes down to an actual standard operating procedure, if you like, that if this happens, then I must do this. Okay, guys, so that's just a few of the kind of things. Very quickly, let's talk about stops actually while we're here. You know, maybe your stops are too tight. Maybe you are not honoring your stops, moving your stops, all that kind of thing. Again, it comes down to looking at it, recognizing it from your statements, recognizing it, and kind of mirroring it with a personality. The reason I put this under personality analysis, people think this is more of a technical thing, but it's not, because this affects everyone differently. You know, for some people, missing trades is no big deal. For other people, it's their arch rival. Some people revenge trade. Some people really get affected by having losing trades. Some people couldn't give a toss. You know, so this all comes down to personality. Again, it's all about looking at you objectively, saying what annoys you, what triggers the trading behavior that ultimately leads to failure, or perhaps you're just trading without doing an analysis. You're coming into the morning, you say, I think that's long, I'm going long. Whatever it is, there's something there that is not working for you, and it's your case of getting it, extracting it, looking at it, working out what's triggering it. I'm not saying don't do it, don't do it, don't do it. It's saying, okay, that's your personality type. Let's avoid the situations that activate that. Let's put in procedures that stop you doing that. If you come to the desk in the morning, you just start trading away, then you need a checklist or something in place that stops you from doing this, a sequence of events. Okay, it's all about putting something, action plan in place to stop you getting triggered. And of course, it's still going to happen from time to time. It's still going to happen from time to time. But the objective is of this whole thing is to remove the things that are causing you problems as a trader. And you know what? Most of the time, if you eliminate a couple of these bad things, your trading will just go through the roof, because you don't realize how much damage one or two of these bad habits is doing. All right, guys, next video, what we're talking about, let me look at my sheet here. We're going to be talking about a complete strategy reboot and strategy selection. So we're looking at more of an operations side of it now, rather than a personality. But it's important. This video is getting on quite long, but it's important to really recognize your personality as a trader. What is causing you to do the bad habits as a trader? What's causing you to trade in a way that's not conducive to your long-term profitability? When you start to nail that down, then we can kind of mirror it with the strategy and put it all together. So next video is all about strategies, guys. See you there. Good trading. Take care. Bye-bye.